Well, a bit of a nervy day on the local share market. Earlier I spoke to Martin Lakos of Macquarie Private Wealth. Martin Lakos, a pretty soft day on the market. What sort of impact did the weaker than expected GDP numbers have?
Yeah, well, we actually saw the market down a lot heavier through or post that release of the number. Tiki, we saw a modest recovery through the afternoon. Look, that GDP number did surprise. I think the market was going for about 0.4%, came in at 0.2%. That's an annualised rate of 2.7%. Now, most analysts aren't going to be hanging their hat on a single quarter's number, and there's still an expectation, which we think also the Reserve Bank has the same expectation, there will be an upswing next year, particularly a recovery in net exports and a recovery in inventories. But the weak September quarter was very much focused on those two areas that were actually quite weak. The positive surprise, Tiki, was consumer spending actually was up. We're also seeing the net savings ratio starting to improve. It's those sorts of numbers that are probably going to continue to help improve the outlook on the Aussie economy going forward. And obviously we're going to be seeing, with bated breath in fact, how the December quarter starts to pan out.
Well, we've also got this wall of worry in Europe, haven't we? We've got a warning now on Portugal's credit rating and still worries about Spain and Italy. How are investors, how should shareholders take that sort of news?
Yeah, just after when the Irish debt bailout was announced, we thought it was safe to go back in the water. Clearly markets remain skittish about the outlook there, and we've seen in the last couple of days the European debt markets, particularly though obviously on the government debt side, we've seen those yields rise, both particularly in focus for the Spanish, Portuguese and in fact the Italian debt position as well. We're not that concerned about Spain. It's a very robust economy. It's about 11% of the European zone, and more importantly about half of its debt is actually held domestically. So there isn't that big pressure from foreign bond holders to be seeing a recalculation of maturities and a restructuring of their debt position. But all that being said, it's clearly still on the forefront of most key investors' minds, and that's going to be an issue for markets leading into Christmas.
As we close the year, any stocks that we should be looking at over the Christmas period?
Well, it's pretty hard to predict what Santa Claus is going to bring on Christmas Eve in terms of the broad market, Tiki, but certainly those stocks that are potentially leveraged to a better Christmas season